Welcome once again to my second class or second webinar we're going to be having this week, which is going to be the second to the last. Also the same as... Okay, someone says he can't hear me very well. Please, who else can't hear me very well? If you can hear me or see my screen, let me know ASAP. If you can hear me or see my screen, let me know. Okay. We can hear you. We can hear you, or you can hear me. Okay, I can see your screen. Beautiful. All right. Okay. Good. Okay, good. Yeah, as I was saying, this is the second class or second webinar. Tomorrow is going to be the last day, which I feel is going to be the most important topic you guys need to actually know on your journey to trading smart money concepts. Once again, I want to say thank you all for making this possible. 410 subscribers. This is beautiful. The video I uploaded yesterday already had 10 views, 107 views already, which is beautiful. I love that. So which other video is here, which is this one. This video already has 2,890 views. Shout out to you guys. Thank you all. For those that are sharing, keep up the good work. Okay, so today we're going to be talking about smart money concept as usual, then how to identify liquidity. Yes, if I'm correct, very correct. Today's class we're going to be talking about how to identify liquidity. From where we stopped yesterday, we said liquidity is money. Let me check if I'm recording this. Okay. Yeah, from what I said yesterday, I said liquidity is stop loss and then stop loss is money. Yes. So this is the way to spot liquidity, because yesterday I only explained what liquidity is because I was explaining the terms. And okay, just trying to check my network. Sorry for the pause. When the network goes off like that, I really don't like talking alone. Okay, the network is good now. Yes, liquidity is money, and then liquidity is stop loss, and then stop loss is money. Yes, because whenever there's a liquidity grab, you should know that there is a lot of things that's going to happen. A lot of people are going to get stopped out, and then a lot of people are going to get... Okay, a lot of people are going to get stopped out, and a lot of people are going to get in the delivery of price or entry, which is the money. I'm talking about the market makers now. Those are the ones that will gain the most money because they are taking out stop losses of people, and then they are moving in their desired direction. Okay, I was just explaining liquidity yesterday, and now how to identify liquidity. Yesterday I explained how to identify order blocks or demand and supply zone, which I believe everyone understood, and I really love the reviews I'm getting on my WhatsApp DM. Some people are getting it. Well, I don't know if some people are working on it, but at least I got responses back that, oh, this is what I was able to do after yesterday's meeting. This are the things I've been able to do after yesterday's meeting. So good, keep up the good work. So liquidity is money. Yeah. So where can we see the liquidity now? How can we spot the liquidity? You said, okay, you want to spot the liquidity so that I will not be the liquidity. First of all, there are different areas where there's going to be liquidity in the markets. In the ranging markets, there is liquidity in the ranging markets. In the trending markets, there's liquidity in the trending markets also. So this is either a trending market to the upside or what to the downside. So let me show you where liquidity always lies in a trending market. Everybody knows where liquidity lies in a ranging market, so that shouldn't be an issue. If this is a ranging market, yeah, this one I'm trying to draw. This one is the most common form of liquidity, either the normal market range or the Asian consolidation range. Okay. This is what I've been trying to avoid since... Yeah, as I was explaining, there are areas where liquidity lies in these markets. First of all, the ranging market, which is the most common one. Then the trending markets, either the uptrend or the downtrend. Now let me first explain the ranging markets. Ranging markets, liquidity is always here, and then liquidity is always here. So why is there liquidity there? Because there's a lot of people here. There's a lot of sellers here at that point, and then there's a lot of buyers here also. So a lot of things is going on here, a lot of transaction is going on here, a lot of orders are being opening and closing at this point. So we always use this dollar sign to identify our spots wherever there's going to be liquidity in these markets. Yeah, this dollar sign, we always use it for liquidity sign. If we see liquidity, okay, yes, this is a very, very good zone. This is a buyer zone, as you can see. And then this is a seller zone. So there's a lot of sellers here and there's a lot of buyers here. And according to retail, they believe that they want to sell at resistance or buy at support. So in the process of selling at resistance or buying at support, market makers don't want them to do that. Most of the time, they always get manipulated. Yeah, that's what most people call manipulations. Manipulations. Then they stop them out of their journey and then move in their desired direction. That's the same thing also for someone says it's only seeing my logo, only my logo. That's not possible. If you can see my screen, let me know ASAP. I have 23 people on this call. Okay, you can see the screen. Yeah. Now, please mute yourself. Now, in the ranging markets, I've explained how to spot liquidity, which is the buyer zone and then the seller zone. Whereas in the trending markets, now in these ranging markets, there are different type of range. I think most of the time it's always just two ranges, which is the normal market range that happens during either the London session or the New York session, and then the Asian consolidation range that always happens before everyone wakes up in the morning or when the market is asleep. That range just occurs because there's a little volume of transaction going on at that particular time. So there's a little amount of transaction going on, which causes the consolidation, and we believe that consolidation also what causes liquidity, and that's why we call it Asian liquidity. And there are also ways to trade the Asian liquidity using other blocks below or other blocks above. Now, the second way to identify liquidity on the uptrend is the highs. This is an uptrend. So this is the most recent high here. This is also a high here. And this is a what? This is a high here. Yes, we believe that there's liquidity also at this point because there was a lot of sellers here that were pushing these markets to this point. This is lower high and lower low as usual. I'm sorry, higher low, higher high, higher low, higher high. So we believe that there's a lot of sellers here, and then if market wants to continue buying, it should take out all the sellers at this point and then cause a liquidity grab. You can see sometimes the higher high may perform like this, something like this, and you can see this. So at this point in time, this is still an uptrend. As you can see, lower, higher low, higher high, higher low is forming, then higher high is forming. But in the process of forming higher lows, higher high, higher lows, higher high, it is what's grabbing liquidity. That's why most of the time, if you see some people say they target areas of liquidity, most of the time it's not always only ranging market that is an area of liquidity. Sometimes it might be areas of interest like the higher lows and the higher highs. Grab liquidity of the upside. This is grabbing sellers here because we believe that if this place is a selling zone for a turning point for sales, like something like a supply zone, then we should have what a liquidity grab. And the target areas of liquidity that we will say, okay, let's watch out for a target area of liquidity. Target area of liquidity are also the highs. We believe that markets should run out, should take out all the liquidity of the highs before it gives us a drawdown or a bounce back or a retracement. Yes, a retracement. We believe that okay, if the highs are or lows are forming, market should take out the liquidity before giving us retracements. That's why we refer to those areas as areas of liquidity. So same thing for the downward trend also. We believe that this area here, this lower low, is an area of liquidity also. We believe that markets would break out from the zone and then grab liquidity of the buyers. We believe that there's a lot of buyers here, and market should take out the liquidity, grab the liquidity, and then continue moving in the sell direction it wants to actually move. So this is the next area of liquidity here, the next low, which is this one here. This is the next area of liquidity. So we believe that market should reach that area of liquidity. So whenever you're taking a sell, maybe you're taking a sell at this lower high here, your next target should be what? Should be this area of liquidity here, which is what? The lower low, because you are what's expecting markets to grab liquidity of that low and then spike to the upside before moving in their direction. That's why most of the time you see take profits areas. If someone is in a sell, the take profits area should be what? The next area of liquidity, which is the lower low. If you are in a sell here also, the area of take profits should be what? The next low, because we believe that market should run to that side and then grab liquidity. So in place of grabbing liquidity, it is going to what? Eat our take profits. That's the ideology and idea behind the higher lows and higher highs. So it's not only in the ranging markets here that we can say, oh, liquidity. There's also liquidity in each highs, every high and every low in these markets, because there's a lot of others also happening there. When I explain WYCKOFF in the next YouTube video I'm going to make, you are going to see what I mean by the highs and lows. Okay. So for example, too, if you have to take a sell here, the TP should be this low here. So if you are taking a buy here also, the TP should be here, realistic TP. That's an area that the market will quickly run to before moving down and then moving up again in the desired direction, just like that. So if you have to take a sell also, it should be what's this low here, but market didn't get to this low before changing to the desired direction to be what? To be bullish. So according to trade management, you should know how to manage your trades when you enter trades. If you are taking a sell here also, the next area of liquidity should be here, this low here, this beautiful low that we have here. We expect that, okay, market should what? Touch the low and what? Grab liquidity. But instead, markets use that as a turning point, touched it and then started ranging, probably a WYCKOFF range, and continue moving to the bullish side. That is how to identify areas of liquidity. Using higher lows and higher highs, you remember if you want to take a sell, you are taking a sell at a high price. You are selling high and then buying low. So if you are taking a sell here using the other block from what we explained yesterday, your TP should be here. This is an area of liquidity. This should be the target area. Yes, this should be target area. We expect that market should run the liquidity, move in the direction, and then continue moving down. But what happened there was it touched that area of liquidity, didn't do a lot of things, moved up a little bit before it started selling again. So those are some things you need to know when checking out for liquidity. You shouldn't always target some people, when they use take sell now, for example, they'll say their target should be here because they want to catch 1:10 or 1:100, which is very, very unrealistic. Your target should be area of liquidities, not just targeting any points. Your area should be areas of what? Liquidity. Wherever you believe, lows or highs that you believe that markets would run to either grab liquidity or to either take a reversal immediately. Yes, so that is how to identify liquidity. Now that we've gotten this series of other block, you know how to look for another block inside a demand or supply zone, because inside demand and supply zone, that's where we get our other block, if I'm correct. Now take a look at this one. Someone was asking a question yesterday that how do we know if an order block is, how do we know that this other block is going to hold? Yes, first of all, I made a video explaining how to use trend lines for other block as confluence, and then how to use the other indicator. Where's the indicator here? What's the name? This is the indicator. Volume profile fixed range. Now my subscription has finished, so I have to upgrade before I use it, so I can't really make an explanation using that indicator because it's paid. But watch out for that YouTube video, you're going to get it there. So first of all, you can use a trend line, as you can see, trend line as confluence, and then you are good to go. But in today's topic or today's whatever, we're talking about how to use other blocks for entry. Now you already know how to find structure. Remember, as a beginner, you don't need to complicate things for yourself. First of all, what do you need? Find structure. I wrote it down for you guys yesterday. Find structure, then know the structure. Sorry, not find structure. Know the structure. Is it an uptrend? Is it a downtrend? Or is it a ranging market? If it's an uptrend, what do? You want to look for buying opportunities, which is you want to buy at the higher lows, and then higher lows. But if it's a downtrend, you want to what? You want to sell at the what? At the lower highs, and then the lower highs. Okay, because you want to sell high. Now, if it's a ranging market, what do? You buy at what? Areas of liquidity, right? If it's a ranging market, where is it? Yeah, now that you can see that, oh, this is a beautiful ranging market, I don't want to sell here. I want to sell at this other block. Let's say a candle has formed here before, and this should be your target area. Now, using the structure, you found out that, okay, this structure is a ranging structure. Then what do you need? Look for what? A demand or supply zone. So this is the previous demand or supply zone. This is where you want to be looking for sell opportunities from. Have you seen now? Using structure, still the same thing that I've been explaining yesterday. Structure, 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 then demand and supply. See this young man. See this young man is laughing. Am I, what I'm saying? I'm not saying anything funny. I don't know why someone should be laughing like that, but anyways, it's part of the game. So if you found out the structure, next thing, look for what's the demand and supply zone. Then after finding demand and supply zone, you can try to look for the other block candle that was formed before the break of structure and then the imbalance. After that, you look for entries. So today we're going to be talking about entries with other blocks. There are many ways to enter this market though, different ways to enter the markets. Because left to me, I don't really use the other block entries alone. I use different entries that I use and that I have. Let's go down to the 5 minute time frame to look for entries. Now, first of all, let me explain why some other blocks work and why some other blocks don't work. First of all, the main reason why some other blocks don't work is because you might not be following structure. Now, let me use an example here. This is another block from this previous structure here, if I'm correct and precise. Yes. Now, some people always draw other blocks like this. You can see that this other block was formed in the process of creating this structure here. Now, what some people do is after this bullish structure has taken over and then the bullish structure is already going bearish. Now you can see this bullish structure is no longer at this point here is no longer bullish. But some people will still draw out that other block and be expecting markets to come to it and then keep moving up. Which might be very, very wrong. Which might be very, very wrong if you don't want to trade inter-trend, counter-trend trades because, okay, you're expecting this other block to hold, but it would only have held if this current market here came to retest it and then, but now at this time here that this other block is drawn out, market would have been bearish at this point. So the chances that this other block is going to okay, thank you for muting yourself. The chances that this other block is going to hold is 20%, and it might only hold doing some stuff like this, ranging a little bit, and then continue selling. Why? Because you are no longer following structure. The structure at that point would be very, very bearish before the market touches this other block here. And at that point, you want to be looking for selling opportunities, not buying opportunities again. So when you're taking a buy opportunity at this point, you might see that, hey, this thing is not going to hold, or it might just buy a little bit and then continue moving down. That's because the structure at that point is very, very bearish. But when you're looking at multi-time frame analysis, it might hold and it might not still hold. Now, according to my time frame, this is the 4-hour time frame. The 4-hour time frame is also very, very bearish. Now, I won't see a reason to take a buy on this other block here. I think this 4-hour structure was very, very bullish. Like this. Then I might say, okay, I want to still look at this other block here on the 1-hour time frame. But at the moment, the structure on the 4-hour time frame is also bearish. So this other block here might just hold a little bit to give us a lower high. Once that's giving us a lower high, just continue breaking down and continue selling to the downside. So that's why that's most of the time people draw the wrong other block. You are drawing the right other block, but you're using it at the wrong time. Drawing the right other block and then using it at the wrong time. So it always affects the trading, and sometimes it won't hold. You get sometimes it won't hold. And sometimes if you are lucky, it might hold. And if it is going to hold, it might not hold for long because market just wants to create some sort of accumulation to redistribute. to redistribute. So that might be the reason some other blocks are not working. Secondly, secondly, the thing is, nobody is 100% sure in these markets. Nobody's 100% sure in these markets. That's why um no strategy is 99, no strategy is 100%. In fact, no strategy is 99%, or let's just say no strategy is 100%, because you are not a market maker and you don't know which setup or which thing is going to hold. Like, okay, if you're even trading, if you are trading support and resistance, breakout and retest, is not, no strategy is 100%. That's why you have to give yourself a set of rules that you have to follow. That, okay, if I make these rules, will I still be trading? Would I still trade? Would I still do this? Would I still do that? So tomorrow I'm going to be talking about how you can make a trading plan to give you a set of rules that you can follow. You understand? So you don't just get emotional when things don't go your way. Now, as I was saying, strategy is 99%. So you have to understand that before you start using any strategy, that's what I always tell my students. Before you use any strategy, before you say, okay, you want to start trading live accounts, or when you are trading live accounts, and then before you say you want to be consistent, first of all, learn to take more than 300 trades using that same strategy over and over again. Learn to take more than 300 trades using the same strategy over and over again. But most people don't want to have that patience that, hey, 300 trades, when will I do this? When will I trade live? When will I be able to make money? When will I be consistent? But if you cannot take, okay, you cannot take your time to take 300 trades or 500 trades, then how would you know that, hey, this strategy fits my personality, or this strategy is 90% accurate? Or because they are saying, okay, because people are saying the strategy is 90% accurate, that does it actually mean the strategy is 90% accurate? You understand what I'm saying? So you have to change your psychology towards that. This is a topic for tomorrow, okay? Now, the reason other blocks fail is because, first of all, some people, they draw the right order blocks at the wrong time, like I just explained, and then some people don't follow the order block rule. Some people just draw other blocks, and then sometimes there won't be any break of structure, and sometimes there won't be imbalance. You get, there won't be imbalance. Like this other block here now, there's a beautiful break of structure here. In fact, multiple breaks of structure, and here and here, you can see multiple break of structures. Now you can see this imbalance here, and then the sell move. So what is the other block candle that was formed before the break of structure? This is the old supply zone, as you can see. That's the old supply zone. Then if you are refining, you refine it to the last up candle before the down move, which is that candle. Because I always say you take it from the wick. So this is going to be the wick here. Yes, and then you wait for mitigation. Now, the ideology or the idea behind this imbalance is, let me delete this. We believe that imbalance is caused by a lot of orders than a particular order. So from this sell perspective here, there's a lot of sell orders than the buy orders. So the ideology behind imbalance is, whenever there's an imbalance, it means there's too much of orders, and then it's abnormal. So we're expecting markets to fill that imbalance, either up to half or up to full, before the market can start moving again. So the imbalance can be caused by any other reason, anything can cause imbalance. Most of the time it's always news. But sometimes there's always imbalance caused by when there's break of structure, and there's always imbalance. So all those ones are normal without news. Okay, we believe that there's a lot of orders, and then market has to come back to mitigate the imbalance, either to full or to half. Now you can see this imbalance here, and we're okay. If we say, okay, we're expecting markets to mitigate this imbalance to the full point, it means we're expecting market to mitigate it back to this other block zone here, other block candle here, and then look for selling opportunities. And from what we can see here, there's a trend line also acting as confluence. As simple as that. And then you look for your entry. So now today I'm going to be talking about order block entry. It's something everybody should know already, but let me go again. Now, order block entry is still the same thing as the other blocks. It's just that when you are the 1 hour time frame, you look for break of structure, the imbalance, and the order block. Now, when you want to enter, it's still the same thing you've done on the 1 hour. You're going to look out for on the 5 minutes or 3 minutes or the 1 minute time frame. Okay. Now let's go to the 5 minutes time frame on this. On the 5 minute time frame, when the market gets to your point of interest, we call it point of interest, the other block zone. I don't think I explained that yesterday, but let me quickly label it out for those that. Yeah, that's the point of interest, POI. Yes, it's a point of interest because we're looking to sell from this other block zone here. Now, once the market gets to your point of interest, then what do you want to do? You want to still enter on a smaller time frame. You know what some people always do is some people always set instant sell limits at this point that okay, once market gets to this point, they want to what? They want to enter a sell, the stop loss will be there like that, and then take profit is going to be this low here as the target. But you can see as we have here, the stop loss is 12 pips, which is a little bit wide. But left to me is not wide actually, because 12 pips is not wide. It's not wide. It's not so wide. It's at least it's not 20 pips. It's not 20 pips. So 12 pips stop loss is also very, very cool as a smart money trader. Don't let anybody deceive you that 12 pips stop loss is wide. 12 pips stop loss is very, very okay. Now, when you go down to the 1 minute time frame, after the market touches your point of interest, what are you going to look for again? You are going to look for another order block and another break of structure order block that you've been looking for on the 1 hour time frame. You can see market touched the area of interest and then started selling. Then what do you need to look for? A break of structure and mitigation, just like it's happened on the bigger time frame. So this is called fractality of the markets. You're expecting something that happened on a bigger time frame to come again to the smaller time frame to repeat itself. That's the fractal nature of price. Price is very, very fractal. Fractal in the sense that whatever happens on the bigger time frame should happen on the smaller time frame too. Now, as you can see here, once it's touched into the point of interest, we add this beautiful break of structure here. You can see now this is a break of structure and imbalance. Okay, these candles are quite long for me to call them candles that are imbalance. Okay, they are quite long and very, very okay. So what are you expecting now? So at this point, your sell limit should be here. This is where your sell limit is going to be, and then your stop loss should be above the point of interest. Now you can see from what we have here, the stop loss is 4 pips instead of 12 pips. So this is the only advantage of going down to the smaller time frame to use smaller time frame entries. From 12 pip stop loss, we've minimized it to 4 pip stop loss. You can see so beautiful. And at that point, you might be risking more due to your risk management appetite or whatever. But remember that if you are using 1 minute or 5 minute or 3 minute time frame, there's high probability that you have refined it, you have refined the zone, and then there's high probability that it might not come back to touch the zone or mitigate the zone. But if or paraventure it touches the zone, then you are good to go. But for me, I don't use this entry because of the miss outs. You understand? But that is the way to enter with order block on the smaller time frame, either the 1 minute, the 3 minutes, or the 5 minute time frame. Then you set your pending order on the order block on the smaller time frame. Okay, so let's check the 3 minute time frame. If there was a break of structure, yeah, there was a break of structure on 3 minutes time frame, also the same zone actually, and you wait for mitigation. But as you can see here, there was no mitigation until it hits the take profit. Let's check this one here. You can see there was no mitigation till it got to our point of or area of liquidity. So this is one disadvantage of using smart all these type of entries, because most people tend to miss the entry, like, hey, I've missed the entry, I missed the entry left me, stuffs like that. But we did entry I use 15-minute entry and then 30 minutes entry. My students know about this, and there was entry here, and we'll have gotten the delivery of price. But for now, for this free course, we're talking about order block entries. Okay, we're talking about order block entries, and this one did hold. Okay, let's come to this one here. Let's check this one if it's held perfectly fine, and then see how could have gotten a delivery of price right there. Okay, this is very, very beautiful. This was the POI. Market tapped into the POI beautifully, and you can see this break of structure here on the 5-minute time frame. Beautiful break of structure, imbalance. So this is the real imbalance. You can see there was no news, nothing happened, and it's broke structure. You can see lower low, lower high, lower low, boom, broke the lower low, giving us what's a higher high. Then we're expecting what's a lower low and continuing price to keep pushing up. Now, where's the other block that was formed? This is the O demand zone that was formed, right? This is the O demand zone, but you don't want to use the O demand zone. You want to use just a other block candle, which is the last red candle before the buy move. Last red candle before the buy move. So that have been this candle here. Focus on this candle here, and then your sell limit pending, your buy limit pending order would be this zone, okay? And then stop loss would have been below here, something like this. 4 pips sales. You can even use 3 pips, 2 pips. Very, very beautiful. You can even use this if you are not really sure about the strategy yet. You can see 11 pips stop loss, but some people 3 pips stop loss, fine. And the delivery, okay? This would be the area of targets. This is an area of liquidity here, so that should be the area of targets. And market didn't even get there before it started selling. But according to trade management, you should have managed this trade by locking profits and then letting runners run, closing partials. So this is the first area of liquidity, as you can see. First area of liquidity, got it. That will be the TP1, and then this would be the TP2 here. Second area of liquidity. And nice, okay. Let's check another pair. Now, I took a loss on AUD USD this morning stroke afternoon, as you can see here. Was it morning? Was it afternoon? Today, let me just use the word today. Yes, today. Now you can see that nobody knows the real order block that is going to work, or whichever zone is going to hold. But from your knowledge, you should know that A, I've seen an imbalance, A, I've seen a break of structure, and A, there's another block. Okay, so what am I expecting? I'm expecting a mitigation, and then you are what's expecting the movements, mitigation, and then delivery of price. I got my entries, and this range just started happening. Then now it's selling, but I'm out of the game. I'm out of it already. Because I don't want to be interested in this ranging zone. I don't want markets to range whenever it gets to my point of interest. So it took my stop loss, which is fine by me, and I'm out. So let's check if there was a 5 minutes mitigation here. So we add this point of interest here. There's no break of structure here, no break of structure. So let's go down to the 3-minute time frame. Okay, now on the 3-minute time frame, you can see there's a little break of structure here, imbalance here, break of structure here. So this is the first BOS, second BOS, but this week didn't break structure. I don't like using week, so but I have this first break of structure here, which is very, very okay and valid, which was what I used for my first entry. And I used 2 entries here. I used the first entry, which is the normal order block entry, but I don't use order block entry. I don't like using it. Then I used my second entry, which me and my students use most of the time. And I got in here, started selling, went out again. So in the first place of going out, I was like, will this thing hold? Will this thing not hold? And I left it. It was ranging. Then I went to the 15 minutes time frame to see what was happening. And then I saw that it was just ranging. I entered somewhere here when I got another confirmation on the 5 minutes time frame also. I got a second entry somewhere here. But when I noticed that this market wanted to start ranging, I just got out of it. I just left it. Then now it's coming down again. Okay. Now once it gets down, let me delete this. Or no, let me delete this. I don't like deleting those stuffs. Okay. Now once it gets down up to this point here, I should be looking for areas of targets like this, or this one, or this block here, or that block there. Okay. Let me delete that. Delete this. Okay. So I should be Now, when I get a break of structure, I should be expecting more movements to the downside. But I just feel currency has been doing crazy because of the Russian whatever that is happening, Russian, Ukraine, and so on and so forth. CGJ, I've not been, hey, I've not been able to catch one trade. My mitigation got, sorry, my order got mitigated here. My order block got mitigated here, but didn't give me entry. The spike was just too much, and then the entry I got was very dangerous. Yes, it was very dangerous. Though it's played out very fine, but I don't like the stop loss. The stop loss will have been up to 20 pips, and I don't like taking those type of trades. Okay, but let's go down to the 5 minute time frame to see if, yeah, okay. Now this is the 5 minute time frame here. This is a break of structure. Now I would like to answer one question that might be coming to people's mind: that when should we delete our pending order if our buy limit doesn't trigger? Once you can see that market has gotten to areas of liquidity like this, which is the TP1 and then TP2, you can see that you can see that assuming you enter this trade, this will be your TP1 and it will have got it. Immediately, your order didn't get triggered, just what? Delete the order immediately. Don't hold the order and say, okay, my order is still valid. Yes, the order is still valid, but market has gotten to an area of liquidity, grab the liquidity, and then it has done its work. Market has done what it's meant to do, either from this point to this point, or either from mitigating your order or not. Now, you still leaving your pending order might be very unnecessary because market has gotten to an area of interest, and there's no reason for market to come down and then go back there again. It should continue going up, or it should come down and then continue coming down because it has touched our area of interest. Okay. So whenever you have set your pending order, something like this is the 5 minutes order block here. Then if you want to refine, you can go down to the 3 minutes time frame. I think that's what I used, or the 1 minute time frame. And I was trying to look for entry because my second entry was giving me a white stop loss. Let's commas. My second entry was giving me a white stop loss. So I was trying to look for the order block entry, and then I'll use my second entry again. That's the way to view markets in a fractal way. And because we have different ways of entering in the mentorship, we have 5 different entry methods. We have the market maker candle entry, double demand and supply entry. We have the wyckoff entry. We have the normal order block entry, and there's still one more left. I can't remember. There are 5. Okay, so at this point, AUD USD still selling, but I might still get involved. I don't know. Tomorrow is Friday. I don't know if I'll be taking any trades on Friday. And this is USD JPY. Okay, now which pair did I analyze yesterday? I think it was GBP CAD. I was trying to check something or explain something there. Okay, I think I have some zones drawn out. I can't even remember, but if we can see this here, that's the first thing I can see from this area of liquidity here. Liquidity grab. Can see how liquidity grab is very powerful. Just one spike and then boom. So at this point, if you are using 3 minutes entry for order block, you might not get involved. Sorry about that. You might not get involved in delivery of price. Okay, you might not get involved because, yeah, let's go to the 3 minutes or 1 minute time frame now. Yeah, so this is the 1 minute time frame. Break of structure to the upside, and other block before the break of structure should be this one here. You can see if you had set your pending order here, you wouldn't get involved in the delivery of price. So let me check for 30 minutes and 15 minutes time frame if my type of entry is there. Yeah, there's an entry there. I can see entry already. And okay, on 30 minute time frame, it's only available on 30 minutes time frame. Okay, using the order block entry, that is the way to enter. So according to this, you can see this is trying to be bullish, bearish, doing all sort of things. I'm still expecting this order block to touch it, but at this moment, price is just bullish. So I might just ignore this order block here because it might not really hold so much. But let's see what is going to happen. And maybe that's why the sales are very sluggish, because it is trying to be bullish. You can see, but I'm still expecting the sell. I was so strong in this sell because of this imbalance. That was the only reason I took the sell, because normally it's is a minor uptrend here from this structure, minor uptrend, because the sales are not so sharp. But when I saw this sharp sell here, I was expecting something to happen. Okay. So let me check how many minutes we are up now. We are 40 minutes up, and I think that will be all for now concerning using the order block candles for entry. If there's any question, please let me know ASAP. So I believe everyone here should be able to identify order block, and now you should be able to know that there's a difference between order block and demand and supply, and you can now identify areas of demand and supply and how to get an order block from a demand and supply zone that you have drawn. Okay, good question. What is the best time frame to pick an order block? The best time frame to pick another block is any time frame. That's why we have all the time frames available to us. Depending on your type of trader, if you are a swing trader, meaning you are a position trader, you hold trades for weeks, then you should be looking for your order block on the weekly time frame. Let's see something like this. You can see this order block here, and then it went down for how many weeks? 1, 2, 3, 4, 5, 6, 6 weeks. Let's check this order block here also from the week. Yeah, you can see from the week. So that is how you select your order blocks from the weekly time frame. It's still the same thing. The way you view the 1 minute time frame is still the same way you view the weekly time frame. Just take your eyes away and then imagine this is a 1 hour time frame, and then let's view structure. Okay, still the same thing. Break of structure, order block, mitigation. I don't really like this order block because I have another block above here. Yeah, this one. Okay, I like this one. Okay, still the same thing over and over again. Where is the structure? This is still very, 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 very. Is there a break of structure? I really don't like all this sort of break of structure, but we have this kind of break of structure here, and your area of liquidity should be here. It should be this target area 1, target area 2, target area 3. Okay, and markets run there, run there. We should be expecting what's this again, break of structure, another break of structure here. You should be expecting this also, and so on and so forth, just like that. Okay, and then you can refine down to the 1 hour time frame and then get your entries. So it's still the same thing. The way you view the smaller time frame is the way you also view the weekly time frames. Then I hope my network is still good, because something is telling me network is about to go. Okay, so there's no time frame, depending on type of trader you are. If you are a weekly, if you're a swing trader, you look for what's bigger order blocks. If you are a day trader like me, use 4 hour and 1 hour. If you are a scalper, you should know that your own main target should be what? Liquidity. Because you want to scalp, you are done. So look for areas of liquidity like the ranging markets, Asian range. That's why I give you my ebook. Liquidity in the forex market is for those that want to scalp, especially Asian liquidity. When you spotted the Asian liquidity, look for a demand and supply zone, draw out the other block, take it out, just like that. And if you are those are type of traders we are: swing trader, day trader, and then swing. So those are the things you should look out for when you want to enter trades. How can you separate other blocks that are inside liquidity? Now, if your other block is on the liquidity zone, let me quickly draw my 1 hour back. Let me quickly look for a ranging liquidity. Let me just use this as an example here. Now, if there's an order block here inside this liquidity, then there's no reason for you to take the sell or the buy. Okay, let's say let's just use this. If you have another block here, and then you can see that there's liquidity above you. There's liquidity above you here. There's liquidity above you. Please, the market won't respect the other block. The market is always after the liquidity because it will go to areas of liquidity first before obeying anything. So wherever your order block is going to be, make sure there's no liquidity above you. And if your order block is also here, make sure there's no liquidity below you if you want to be taking any trades at all. That's why Asian liquidity is very, very sweet, because once you can spot the Asian liquidity, just look for what order block above or other block below. So this is how the Asian liquidity would be like, and it's tap the other block and move in the desired direction, continue going up like that. Yeah, something like this. Okay, so make sure your other block is there's no liquidity above or below you when you are drawing other block. Okay, if not, market will just tap the other block, grab the liquidity and move in your direction. So you are not different from those that traded support and resistance and that got liquidated. If there's any word like that using support and resistance, gets liquidated. Okay, so that's how to separate other blocks that are inside liquidity. If your other block is on the liquidity zone, please no need to enter the liquidity, no need to enter the other block. Just wait for market to grab liquidity, and if market has grabbed, even if sometimes there might not be other block above or below, so there might be liquidity like this. Okay, now, and there shouldn't be any other block. The only movement should be somewhere like this. And you can say, hey, this is far, this is very, very far, and market might not get there. And market might just do something like this, grab the liquidity, and then start coming down. Now, market has grabbed liquidity, and then there's a break of structure already, right? There's break of structure already. At that point, you can look for an other block that was formed before the liquidity grab, you can see. And then you can wait for markets to tap into that zone again, and then you can take your sell entries from there like that. But don't always force. If you can't see any other block above liquidity, just leave it. Just leave it. Then let there be another block that will form after the liquidity grab and mitigation back into the other block. Okay, I think that should be clear by now. So don't confuse things or don't force other blocks whenever they are not coming out. Please, can you look at EU? Okay, that's Euro USD. Do you refine other blocks of 15 minutes? Not on. Okay. If in the process of refining, you should understand that refining can be disadvantageous. So for me, I don't refine. Once I get to the 30 minutes time frame, I stop. Now you can refine on the 15 minutes time frame. You can refine down to the 5 minutes time frame, and you can refine down to the 1 minute time frame. But understand that when you are refining down to the 1 minute time frame, you are still going to be looking for entry on a time frame that is lower than the time frame you used for your analysis. So if the time frame used for analysis was 1 hour, and then you have refined that 1 hour order block down to the 1 minute order block, now market has gone into your POI, and then you want to buy. If you want to buy at that point, you should be buying on a time frame that is lower than the time frame you use for your analysis. And then 1 minute time frame, you don't have any choice than to just set instant pending order. You understand what I'm saying? You don't have any choice than to just set instant pending order if you have refined or over refined down to the 1 minute time frame. So that's why I always advise just leave it on the 15 minute time frame, and then when you are looking for entries, look for entries on the 5 minute time frame. And then once you've gotten your entry on 5 minute time frame, then you can refine that entry again down to the 1 minute time frame. Okay, and if you are using paid trading view, you can go down to the 30 seconds and then 15 seconds time frame. Do you wait for break of structure on 15 minutes? Yes. You have to wait for break of structure before you can say this other block is valid or not. So you have to wait for a break of structure. So let's go to Euro USD. Somebody said let's look at Euro USD. I don't even know what's going on that pair right now. I don't know what's going on the pair. I even have some markups on it. Okay, let me delete everything that we have here. So this is one advantage of managing trades. You can see this is the first area of liquidity, TP1, then this should be your TP2. Delete, let me delete everything I have. Okay, let's do multi time frame analysis now. the daily time frame is ranging, and you can see here this range has liquidity grab has occurred already from this here. You can see there's liquidity here, there's liquidity there. You can see how markets grabbed the liquidity and moved down. Now, according to what I just explained, once wait for the liquidity grab. In fact, what I just explained, wait for the liquidity grab to happen, and then look for the other block that was formed immediately after the liquidity grab. Then break of structure, you can see there's a break of structure. In fact, this was what I explained some minutes ago. If you can't see other block here, and then it's too far, you can see what I just explained. Wait for the liquidity grab to happen. Then after that, look for another block and entry. You can see how it is delivering nicely. So those that are swingers might have gotten in on this if they manage their trades well, or if they look for entry well. So I'm not a day trader or swing trader. So sorry, I'm not a swing trader, so I wouldn't want to use that as an analysis. So this is the daily time frame right now, and it is still ranging to me. I won't say this is bullish, this is bearish, because for me to say this is bearish, it has not continued moving down since then, and it has only mitigated this and it's still coming down. Okay, I don't like this structure. I can't see any higher lows and higher highs, lower lows and lower highs. That's why I'm not giving any update about it. Now this has been bearish. Now this is bullish. Now this is trying to move up. Okay, now from this bullish perspective here, that's the first structure. That's the first thing I have to see. That where is the structure? I've gotten the structure bullish now. From here is bullish. Then the next thing, what's the next thing I asked you to do? Look for demand and supply zone. Where's demand and supply zone? This is the demand zone, because this is the turning point area. Okay, where's the next demand and supply zone? Where are the turning points area? Is this place here? That's the turning points area, you can see. So where's the next turning points area? It should be here. So nothing so much about that. Let's use this. Don't let me use this. Since we are bullish and we're looking for uptrend opportunities. So then what's the next thing? You refine, you look for break of structure. Is there a break of structure here? Yes, there's a break of structure here. Then you refine it down to the last order block to make it smaller and for precise entry. Is there a break of structure here also? Yes, there's a break of structure here, imbalance, beautiful. And then you refine it down to the last order block candle that was formed before the break of structure. So I can say this is very, very bullish right now because it is still obeying this uptrend. So we should be expecting market to run up to this area here, area of liquidity. Targets, that's targets. This is the 4-hour analysis. Now let's go down to the 1-hour time frame again to check. So for those that always refine, if you are refined on the 4-hour time frame, this is the 1-hour refining, and beautiful. You can see how it's tapped into the zone and then it's still moving. So on Euro USD, what do we have on Euro USD? It's really looking like GBP JPY. I mean, it's looking like UJ or GJ. So this is the area of liquidity targets. This is another target here also. Has market gotten there? No. So if market has gotten there, then we can be looking for more buying opportunities that will make us get to this area of next area of liquidity. Now this point of interest have been tapped already. Has been tapped. Now there's nothing so much here, it's just being choppy. So let's wait for, since there's liquidity here also, I can see liquidity here, resistance is forming. I'll wait for them to grab the liquidity and I'll look for another block after the liquidity grab. That's what I should be waiting for right now. Market has not even been so favorable since the news of this Russia and Ukraine. So riskless, guys. Okay. That's what I'm expecting on EU. Either a breakout from this zone, then after we get a breakout, then we should look for another block that broke out this zone and we target this area of interests. That's how I make my analysis. 30 minutes time frame. You can see there's nothing so beautiful about this. This happened here, this imbalance happened, mitigation back to the imbalance, and has been ranging since then. It didn't even give sharp movements down. I don't like all those sort of movements. Okay, let's check again. I think that will be all. That will be all for now. So if you have any questions, let me know ASAP. Equal eyes, yes, 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 yes. As liquidity, yes, because once they are already equal like that, liquidity is already resting below those eyes or above the, okay, eyes, it should be above. Okay, liquidity is already resting above the eyes, okay? Yes, on daily. In fact, any time frame. Okay. I think that will be all for now. Most people have left the meeting already. We have 16 people on the call, minus me, making 15 people on this call. If you have any question, let me know on the Telegram group. I will be happy to answer you guys. And then tomorrow is very, very, is a very, very important. I have 20% left. On daily, can you look at eyes? Yes, 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 yes. On daily, but if you are a scalper, you shouldn't be bothered too much about. There's nothing like, yes, they are hidden other blocks. Yes, they are hidden other blocks. Yeah, hidden other blocks. If you are a scalper, you shouldn't be so bothered about the daily time frame. So if you are a scalper, you shouldn't be bothering about if this is going to be liquid or not. But on daily, you can look at eyes for sure. And if you are wondering if it's liquid, you can see two eyes. Then yes, if you can see two eyes resting like that, then there's definitely liquidity above those eyes. You understand? There's already liquidity on those eyes. So if there's anything like other block, hidden other block, yes. I will explain that tomorrow because I'm low right now. Hidden other blocks, but let me just try to check, quickly show you how they look like. Hidden other blocks. They are, so you don't need indicators. It works, this other block strategy works crypto volatility anywhere. So you don't need indicator actually. You just need to understand how everything works and then you are good to go. So hidden other block should be like this. Yes, I've seen a hidden other block here. And if we move to the smaller time frame, I'm going to show you that those other blocks are actually going to show. Okay, there's another block here. Now let's go down to the 30 minutes time frame to check if there's other block there. Okay, no other block there. 15 minutes time frame, let's check. We're definitely going to see an order block on one of the small time frames. As beautiful as that, as you can see, there is an order block on the, this is the last green candle before the what sell move, and I got the order block from what the 1 hour time frame without even seeing any green candle. You can see, so they are hidden order blocks. So this is the order block that was formed before the break of structure, and I only got them from looking at the market on the 1 hour time frame. You can see, so there's no need to use indicators here. I'll be explaining how to get hidden order blocks tomorrow because my laptop is low right now. I'm on 19%, as you all can see. If I don't remember, please remind me. So as I was saying, tomorrow's class is, to me as a trader, tomorrow's class is actually the most important because it has to do a lot with your psychology. You should know why are smart money traders losing money despite the effectiveness of the strategy. Because they said 90% of traders lose 90% of their money in 90 days. How is that possible if they are still smart money traders who trade like the banks, who know where the direction of the banks, who trade with the banks, you know what I'm saying? So guys, see you all tomorrow. I think that will be all for now. Yeah, definitely. But I've explained this today, but you get more details tomorrow. So, is EU bullish as there are two eyes on daily? Cancel. Yeah, I understand what this person is saying. Is EU bullish? To me, EU is still very, very bullish because I was, like I explained on the 1 hour time frame, I'm still expecting more up move to the areas of liquidity. Now it's still bullish on the daily, even though these areas are areas of equal highs here, and the liquidity has formed already. And there's another block here that can take out those highs. Okay, so EU is still bullish to me, still structurally bullish. And when there's a change of structure on the smaller time frame, then you can still follow it. But on the daily, it's still good to follow this on the daily because you should be expecting market to take out these highs. Yeah, to take out these eyes from above here and then continue coming down. So you can look for entries to this way up, okay, to buy up to this point, and then you can close because this is also a resistance area and markets can sell before taking out liquidity. Yeah, thanks. Thank you all for your time. Danko for those that are always in South Africa, they always say danko for thanks, okay? Or danki, whichever one. At this point, I'm going to say peace, guys. Let me stop the recording. Okay, let's make it 1 hour. We have 59 seconds and almost 1 hour, almost 1 hour. Yeah. Peace, guys.